Ever find yourself just scratching your head trying to figure out the London property market?
Oh, constantly.
It often feels like a tale of two cities, right? Headlines say one thing, but the reality on the ground feels, well, different.
Mm-hmm.
So today, we're going to try and cut through some of that noise. We're doing a deep dive into the latest market intelligence from LonRes.
Yeah, their September 2025 briefing.
Exactly. We want to see how that, typical summer slowdown actually impacted prime London sales and lettings.
And our mission, really, is to unpack what looks like a classic London property paradox in this data. You've got sales looking, frankly, pretty soft.
Yeah.
But then lettings look incredibly strong. It just signals a market that's still searching for balance, searching for that equilibrium.
Okay, so let's kick off with sales then. August is usually quieter, but it seems like volumes stayed stubbornly low this year.
They did.
And the average achieved prices, they actually dipped 3.1% year on year, which puts values about 1.5% below pre-pandemic levels. Sounds quite cautious.
It does sound cautious, but look closer, and there are these little glimmers of optimism sort of bubbling up.
Oh, like what?
Well, new sales instructions were actually up 10.8% compared to last year.
Okay.
And even more telling, maybe, is that homes going under offer, where an offer is accepted but it's not legally binding yet, that rose 13.3% compared to 2024.
Right.
And get this, that's 18.4% higher than the pre-pandemic average for August. So it does suggest more buyers are committing.
So maybe a lag effect.
Exactly.
Yeah.
With that typical, say, 90-day lag between under offer and exchange, we might just see a bit of a pickup in completed sales this autumn.
Okay, that's the potential positive spin. But there are other figures here that seem to paint a different picture, more hesitation, perhaps. I'm seeing stock levels they're swelling, nearly 18% higher than last year.
And over 23% more than 5 years ago.
Yeah.
Yeah, stock is definitely building.
And that seems to be forcing sellers' hands, doesn't it? Price reductions are up for the 10th month running.
A 10-month trend, yeah.
Yeah.
Up over 23% year on year in August alone.
And deals falling through. Still high, nearly 14% higher than last year. That's a lot of deals collapsing.
It is. It speaks to that uncertainty, doesn't it? People agreeing a price, then maybe getting cold feet or renegotiating.
Let's maybe zoom in on the very top end, the 5 million plus market. Does that hesitation play out there too?
Oh, definitely. Transactions in that luxury bracket were down significantly. We're talking 35% year on year in August.
Wow.
35% and almost 40% lower than the pre-pandemic average for August. So a big drop in actual completions.
But the sellers in that bracket, they seem incredibly keen to sell. New instructions for these 5 million plus homes jumped 27% on last year.
Right, and almost 57% higher than pre-pandemic levels.
Yeah.
Quite a surge in high-end supply.
So the stock of these mansions has grown by nearly 25% in just the past year.
So it's that familiar pattern again, particularly at the top end. Lots of very expensive homes coming onto the market, offers being agreed. But fewer actually getting over the line to completion. It's that paradox again. Plenty of the supply meets buyer hesitation.
Okay, so the sales market clearly shows that tension. Seller ambition versus buyer caution. But now let's completely switch gears to rentals because it's a totally different story there, isn't it?
Completely flips, yeah.
Annual rental growth actually accelerated to 4.3% in August. That's up from 3.2% in July. And average rents are now, well, LonRes calls it an extraordinary 37% above their pre-pandemic average from 2017 to 2019.
Extraordinary is the word. And activity's picking up, too. Let's agreed, we're up 14.4% on last year.
Okay.
New instructions also rose, about 15.5%. So stock levels are improving a bit, 21.4% more rental homes available than a year ago.
But it's clearly not enough.
Not nearly enough to dampen that price growth, it seems. Even with more stock, activity is still below those pre-pandemic norms overall.
Right, which is keeping that upward pressure on rents really strong.
Right.
And look at discounts from asking rents, they're tiny.
Shrinking fast. Just 1.9% in August. That's the lowest since late 2023.
So tenants have very little bargaining power right now.
Seems that way. The demand is just relentless.
Okay, so pulling this all together, what does this actually mean for you listening? The big picture seems to be this split market, this bifurcation.
Yeah, you've got the sales side grappling with seller hopes versus buyer nerves.
And then the rental market where demand just seems to be overwhelming any new supply that comes on. It feels like more than just a wobble.
Agreed. It points towards maybe deeper structural shifts, Ownership becoming even more distinct from renting in London. It's a market adjusting, definitely searching for that balance.
So the key question heading into autumn then.
I think it's, will those rising under offer numbers we saw in sales actually turn into completed deals?
Or will the high stock, the price cuts, the fall-throughs, will they keep things subdued?
Exactly. That's what we'll be watching.
And maybe something for you to think about. With these totally contrasting trends, why are rental prices still surging so dramatically, even as stock levels show some improvement? What does that sustained pressure really tell us about London's housing dynamics going forward?
Something to mull over. We'll be back soon to dive into the next set of data.